Hello everyone, thank you all the attendees for joining us today. I hope all the attendees had a great time in networking with your peers in the networking lounges. A very good afternoon to all of you. I am Priyanshi welcoming you all on behalf of Solar Porter and First View Group to our webinar on why is ESG more important now than ever for your business. So, before starting today's proceeding, I take this opportunity to thank and welcome our exclusive partner for the event, EKI Energy Services Private Limited. In India, as well as in the global commercial and industrial context, environment, social, and governance, that is ESG, is now must to have compliance. In recent years, there have been growing support for stakeholder capitalism and long-term impact of companies on society. In the context of recent global COVID-19 pandemic, climate change and commodity price inflation, major commercial and industrial players have adopted several initiatives like renewable power purchase, carbon neutral goals, CSR initiatives to achieve their respective ESG compliance. Incorporating ESG is not only essential in risk approaches but has now been such as an emerging factor for financial growth. I would like to make a small announcement here. I would request all the attendees to kindly post their questions in the Q&A box, and after the presentation the questions will be answered by our expert. So I would like to give a short bio about the presenter for the day. He is heading the Sustainability Services vertical of EKI Energy Services Limited as Senior General Manager. He has extensive experience in implementing corporate level and project level sustainability programs, green rating frameworks, and the emerging sustainability trends. He is a seasoned industry professional and has in-depth working knowledge of manufacturing industry. He is none other than Mr. Victor. Ladies and gentlemen, a round of applause for this huge personality present amongst us. And now, without any further delay, let's begin with our session. We'll be starting with a sponsor presentation by Mr. Arun Victor from EKI Energy Service Limited. Welcome on the screen, sir. Thank you so much.
Thank you, Priyanshi, and thank you everyone of you for joining us here with us today. With your permission, I'm sharing my screen.
Yes, sir.
My screen is visible?
Yes, sir, we can see it.
Yeah, today we are all here to deliberate upon one of the important aspect, ESG, and why it is more important now than ever for all the businesses. We'll be starting from the basics of basic understanding of what is ESG and why corporates are pursuing this very seriously now. What is the importance of taking this issue very serious, and what are the benefits businesses are going to get out of it? And similarly, we are going to see what are the different kinds of pressure faced by the industry from the regulatory perspective and from the stakeholder perspective, and how can really companies or corporates can go about taking this ESG as a very serious issue, and then how to excel in ESG initiatives. So that's the brief agenda today, what we're going to see. And to begin with, I start with what is ESG. Everybody must be aware because most of you are from the ESG community. E stands for environment, S stands for social, and G stands for governance. And ESG is becoming, and it is a very popular term among the investor community. Investor community uses the word often ESG. Otherwise, people who are in the corporate sector, they tend to use the word sustainability. So ESG and sustainability both can be used interchangeably. Mostly people from the financial sector use the word ESG, and we can sense the trend that many of the financial institutions is seriously incorporating ESG in their portfolio, in their investment decisions, and there is a raising awareness among investors. We all can see how the assets under the management, considering ESG, as an important aspect have risen. This is a case with respect to India. When we see in 2019 and today, it has almost multiplied by 5 times. And we also see that the ESG indices are performing or outperforming the benchmark indices. But that means the ESG indices are giving higher returns. So there is a great amount of momentum for ESG, and it all started with the responsible investment principles of responsible investment, where many of the investor community signed this initiative, and they are taking these principles very seriously and incorporating and practicing it. So this is what this is a trend which shows how many of the people from the investor community have signed to the UN principles of responsible investing, and almost there are more than 3,700 plus signatories, and more than 100 plus US $1 trillion of assets under the ESG. So this is how the trend is growing and how the investor community is giving importance to it. So to begin with, we let us understand more detail into what is E, what is S, and G. So E stands for the environmental performance of a company, where it can include the energy consumption, the waste the company makes, and then what are the resource a company uses for its operations. Consequently, now the climate change issue is a major issue, the carbon emissions which companies are making. So every company uses energy and resources, and it is also going to affect the environment, and the companies are also affected by its environmental performance. So that is where E stands for. Similarly, so S stands for the social criterias, how the company is managing with various of its stakeholders, their internal stakeholders, their external stakeholders, how they are practicing harmonious relationship with the employees, how they are considering diversity and inclusive growth. So a lot many of social aspects are coming under S. Similarly, G stands for governance, where it talks about the practices, the controls, the procedures the company adopts for an effective governance, and including how it is complying to legal requirements and how various decisions are made within the company. So G is for the governance. So these are the basic aspects that comes under when we say ESG. And now you might be aware that companies are coming out with a ESG disclosure or a sustainability report, which is basically a non-financial report, different from annual report, which talks about how the company is impacting the environment or the society, and with including all the stakeholders. That means with stakeholder inclusiveness and engagement, companies make a materiality assessment. They identify the risks and opportunities in the ESG aspects, and they showcase their performance and achievements under ESG. Similarly, their actions and priorities for the future. So these are some of the key features of a typical sustainability or ESG report. It basically covers the non-financial aspects, but it includes the financial impact of the non-financial material issues, how focusing on environment or society is going to impact the financial aspects of a company. So that is a part of ESG report. So this is a simple understanding, a comparison between ESG report and annual report. This is how it looks like. When we say annual report, you can just look at read the company's financial performance, their business model, their various other competitive aspects you can read from an annual report. But from an ESG report, these are the various aspects we will be able to read from a sustainability or an ESG report, how the company is performing in terms of adding a positive value to the environment, to the society, and how various practices are being in place to govern the organization. So financial performance is very important, but in today's context, ESG performance is more like becoming a necessity or a mandate. But when we talk about ESG disclosures or reporting, every ESG report is unique. One important aspect of ESG report is stakeholder inclusiveness. Company has to include the views of internal stakeholders and external stakeholders. and accordingly report their performance. The examples for internal stakeholders can be your employees, your workers, top management people, and the external stakeholders are customers or regulatory bodies. It can be institutions, your suppliers, the local communities. All of them becomes part of external stakeholders. So a company has to include in the process of doing a material assessment and then disclosing their ESG performance. So that's a very unique part of any ESG report. So when we say a company need to disclose ESG performance, they have to first identify, prioritize the issues which are more relevant to them and the stakeholders. So that's called as a materiality analysis. So none of the aspects should be omitted or misstated, so that it is giving a wrong direction to the stakeholders. So definitely it is very key for every company to identify the material ESG issues. And there is no single method for undertaking a materiality assessment. Uh, 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 we have to include our stakeholders, take their views, and then apply the materiality analysis and identify the key environment and social aspects to be considered part of our reporting. Similar to the various financial materiality aspects we consider to understand the company's performance or positioning or development. Similarly, we have to apply the double materiality of social and environmental analysis, including all your internal and external stakeholders. So this is how a materiality assessment looks like. This is an integral part of ESG report. Any company wanting to do an ESG disclosure have to do a materiality assessment. On the right hand side, you're saying how these issues are going to impact the business uh, on a scale of low to high. Similarly, how important are these issues when stakeholders, how the stakeholders see the company, how important these factors are to the stakeholders from low to high. So that you can see the high priority areas, which is important, which is impacting the business as well as which is important to stakeholders. And we take these issues as a material issues, and then companies are building up programs, taking actions to improve these aspects, to really improve their performance. So inclusiveness is a very key principle in coming out with a materiality assessment. Uh, so many companies come out with their sustainability or ESG reports. These are some of the examples from corporate sector. When we wanted to produce an ESG report, we can align our report with various of the national and global frameworks. So companies sometimes align with the GRI reporting standards. They will align themselves with the India specific standards. Similarly, there are many other global standards, or even sometimes companies align their disclosures with multiple standards in a single report. So many ways we can do this disclosure. And once a company comes out with a disclosure, the most important part is getting an external view of it. So getting like a financial report is independently audited by a third party, so which is authenticating your financial statements. It is very important for companies to get a third party assurance of for their ESG report. Uh, so this improves the reliability aspect. So organizations can adopt any of the key assurance standards. A1000 AS is one of the most widely used standard by sustainability professionals to assure to have a third party view of their ESG disclosure. Similarly, IC 3000 is another popular standard used for assuring the non-financial information. So this is how we have to go for the external assurance of your ESG reports. Now, why this disclosure is important? Because this is a report which is going to be seen by all of your stakeholders, both internal and external, and investors use this information to see how resilient is your company, how well your company is equipped to manage the environmental social issues. And this can really benefit companies in providing improved access to capital or complying with the regulatory changes, and then really it gives a long-term business value by strengthening the corporate performance. And it will also enhance your reputation and the engagement with your stakeholders. So these are all going to be the key benefits when companies really focus on ESG issues and come out with disclosure. And moreover, one important aspect for all of us to understand here, the regulatory landscape is changing. Every year, there are new regulations coming in. ESG is becoming more and more a mandate. So this is the right time we all need to think about taking these aspects very seriously and implement the practices. When I say regulatory landscape, so these are some of the rapidly evolving regulations worldwide. People must be aware about the EU's sustainable finance regulation, the green taxonomy, and the SFDR disclosures and corporate sustainability disclosure. So these are some of the latest things are happening in the Europe, where legislation is going to drive or making the ESG mandate for the financial sector, like Sustainable Finance Disclosure Regulation (SFDR). Uh, these are some of the regulations in place, which is seeking the asset managers. They also should disclose how they are considering the ESG risk in their investment decisions. So let it be the pension funds or insurers or any asset managers, they should include ESG risk in their investment decisions. And also, fund houses will have to include information, ESG related information, on various of the platforms to keep the investors informed. So this is on the financial sector side. Similarly, on the corporate front, the CSRD directive has really made almost all of the companies to come out with their ESG disclosure. It is making around more than 50,000 companies. They have to mandatorily come out with their ESG or sustainability report. And EU has established a taxonomy to define what is sustainable and what is not sustainable. So this taxonomy is being used to understand by the investors to understand to determine the sustainability of their investments. So this is also playing a very key role. So that's how the ESG policies and mandates are evolving across the globe. It's not only in Europe, it's happening all across the globe. Um, Now we'll see how these requirements are evolving in India. So the recent one is with respect to the Brsr, Business Responsibility and Sustainability Reporting. 2021 May, SEBI issued a circular, and they have mentioned that the top 1,000 listed companies by market cap have to adopt this. Prior to Brsr, we had the VRR reporting, and this is based upon the national guidelines on responsible business conduct, the principles of the guidelines, and this is again influenced by leading international standards. So the Brsr is not mandatory at present for this year, but from next year onwards, it's going to become mandatory, so that companies have some sufficient time to adapt to this new reporting compliance. But still, companies are now encouraged to adopt it as early as possible. So you are now seeing how ESG is becoming more or less like a mandate. And recently, RBA has also released a discussion paper on climate change and sustainable finance. There are a lot of suggestions that has come out of this discussion paper, where the regulated entities by RBI were suggested to have a board-level committee that has the expertise of sustainability and that can guide the institutions on climate-related policy, strategy, and objective setting and performance monitoring. Similarly, these entities regulated by RBI are being suggested to integrate climate risk as a part of their due diligence processes. For example, any bank giving loan, they have to have this climate risk analysis done or a rating done for the customers. Similarly, the institutions are also recommended to disclose their climate related information, and they can align themselves with TCFD. So that's another major suggestion that has come out. Likewise, there are many other suggestions that have come out, like banks may start use and financial institutions and banks may start using tools like stress testing or climate scenario analysis to identify vulnerabilities. and then start focusing on implementing green initiatives in their own operations or offices. Similarly, in terms of capacity building. So this push is really happening. Why? Because globally, banks and financial regulators are factoring ESG into the institutions. And this measure by RBI is also aimed at pushing the India's commitment and helping the India's commitment towards achieving the net zero target by 2070. So these are the various types of regulatory changes happening both globally and then in India. Now we will see what are the type of different types of ESG reporting frameworks that are being adopted by corporates worldwide. There are two types of ESG reporting frameworks. One is voluntary, and the other can be regulatory, like we saw Brsr and then CSRD. So these are some of the regulatory frameworks we have. But in terms of voluntary, there are many popular standards or frameworks. Everybody is aware about GRI. That's a global reporting initiative. They have a very robust standards, and it's a very popular standard. Similarly, we have the integrated reporting framework. We have recommendations of TCFD, how to disclose climate-related information. Similarly, we have the popular sustainability accounting standards, both Sas B Standards. So these are some of the voluntary standards, and there are some regulatory frameworks available. So companies align themselves to both voluntary as well as regulatory is something which is have to be done absolutely, but voluntary is something which we can pick and choose. Uh, Coming to global reporting initiative, this is one of the most reference standard, and the latest one was published in October 21. And companies are encouraged to take up the standard, new standard as soon as possible. Specifically, they have the universal standard. There's a general standard which is applying to every organization. There are topic specific standards which covers the economic, environmental, and social material topics. There are some specific sector specific guidance available under the GRI standards where the sector specific which is getting exposed, they can use the framework and the matrices. So this is a very brief about GRI, and this is the most widely used framework for sustainability reporting. Similarly, we have the Sas B Standards, where Sas B is a US-based not-for-profit organization that develop sustainability accounting standards. Sas B Standards are more industry-specific, and they are aligned to different sectors, and they outline the material topics which is important for companies with respect to specific sectors. And it addresses 26 sustainability issues following 5 dimensions, starting from environment, social capital, human capital, business model, innovation, as well as leadership and governance. So these are the 5 dimensions which SASB covers, and SASB standards are more industry specific. This is also very popularly adopted by corporates worldwide. And we have the integrated reporting framework. This is actually formed by the International Integrated Reporting Council, which is a group of regulators, investors, and companies, and standard setters and NGOs. This is a novel and advanced type of corporate reporting where corporates come out with a single report, and this is more focused on the concept of value creation. And here, all the financial aspects, the social aspects, the natural capital aspects, the human capital, and then manufactured capital. So all these capital, these are the 5 important areas integrated reported focus on. And and companies report as per the integrated reporting framework. Using a single report, they can go for an integrated reporting. This is again many regulatory bodies are also recommending to go for integrated reporting. Then TCFD is more focused on climate-related disclosures. This has been recommended and promoted globally by many of the regulatory bodies which regulate the stock exchanges, and this is actually established by the Financial Stability Board. The recommendations came out in 2017, and again, this is a voluntary a framework where climate-related risks and opportunities are identified, and performance are disclosed, used as per aligned with these recommendations. So this again is a very popular framework used by companies worldwide to report on their risks and opportunities. And CDP again is another not-for-profit organization, has been in the industry for more than 20 years, where it provides a very robust platform and a framework for uh, companies to report on their climate-related performance. CDP offers three reporting categories. One is on climate change, another is on water, and third one is on forests. So companies can make use of this platform to report on their performance, and this is a very good platform for making an understanding of how they where they are in terms of whether they are at a very early stage or they are at a mature stage or at a leadership stage. So they will be able to get rating, and the companies can use this framework to understand at what level of maturity they are into in terms of their climate change performance, water or forest related activities. And apart from these frameworks, there are many other frameworks. So there are some voluntary uh, 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 ratings, there are frameworks, there are raters available in the market. So these are some of the somewhat widely used or popular rating agencies or frameworks available, starting from the basic, where corporates take up ISO certifications like 14,000, 26,000 for social, 37,000 for governance. So they adopt ISO voluntarily, and this is actually accelerating the ESG ecosystem. There are initiatives like SBTI, Greenhouse Gas Protocol for calculating the carbon emissions, then initiatives like RE100. So these are all voluntary things which corporates are taking up, and this is accelerating the ESG ecosystem. There are various frameworks as we discussed: GRI, Sas B, UN Sustainable Development Goals. Then there are TCFD framework, IR framework. So these are standards of frameworks which companies use to disclosing their ESG performance. And there are some evaluating bodies like CDP, where companies can disclose their information, as well as the CDP evaluates the companies and provides them a rating. Similarly, there are Dow Jones Sustainability Indices is another popular indices which collects data from the companies in the form of questionnaires. They analyze the information and they provide ratings. Then there are some agencies which do only the evaluation, collecting the public and privately available data, and then they provide the ESG rankings. So like MSCI, uh, FTSE for good, EcoVadis. So these are the agencies which provide the ESG related scores. And there are again agencies which collects data from the public domain, like sustainable report, press releases. They analyze the information and provide ratings. So these are the various types of ESG frameworks and rating providers available, and companies pick and choose whichever is the best suitable for them. Now, since we are talking about the rating framework, we felt that it is very important to have a glimpse into the Indian ESG framework, BRSR, which has become a mandate now. And so this is the evolution of ESG reporting in India, starting from 2009, how the reporting framework has evolved, right from the launch of the National Voluntary Guidelines by Ministry of Corporate Affairs on CSR activities. Then SEBI mandated BRR for 1,000 for the top 100 listed companies. Then CSR is mandated. Then the BRR was extended to top 500 listed companies. Then integrated reporting was advised by SEBI to be adopted on a voluntary basis. Then came the national guidelines on responsible business conduct. Then this BRR was extended to top 1,000 listed companies. Now BRR is being mandated for the top 1,000 listed companies. BRR is now converted into the latest BRSR, and that has been introduced in 2021 and mandated for 1,000 companies from 2023 onwards. And this is how the ESG landscape evolved in India. And so reporting, as we mentioned, BRSR has become mandatory for the top 1,000 listed companies, and entities have already started preparing, and then uh, they are aligning their sustainability reports to BRSR as well. Many of the companies are already coming out with GRA or Sas B or TCFT disclosures, they can cross-refer to BRSR under these frameworks. So this is how this is a basic overview of what is BRSR. Going into the structure of the BRSR, there are three sections. One is the general disclosures. The second one is the management and process related disclosures. The third one is the principle wise performance disclosures. So these are the three basic sections. Under section C, there are two indicators. Essential indicators have to be reported mandatorily. Then the leadership indicators can be voluntary. It's not mandate, but better it is if the company reports on the leadership indicators. So these are the three sections of reporting under the BRSR format. Um, Section A is about the general disclosures. We have to report ourselves on about our company, what are the products or services we provide, about our operations, about employees. So these are some of the aspects which we have to provide in the general disclosures, including our CSR activities. Coming to the management and process disclosures, talks about the various processes we have, the policies we have to manage our ESG issues. So this is most focused on the management and process related disclosures. And section C talks about the principle wise performance related disclosures. This is the most important section where the essential indicators have to be reported mandatorily, which will include information on environment, energy, emissions, water, waste, social impacts. So these are some of the criterias which we have to provide information mandatorily. And on the leadership front, we have to report they provide information on some certain advanced areas like data on life cycle assessments, uh, uh, whether whether we have done a full scope 3 emission inventory, some disclosures on supply chain, a detailed breakup of our energy consumption, or data on biodiversity, and certain policies. So some of the advanced aspects we have to report under the leadership indicators. So leading companies will be able to attempt this. There are certain areas which is tough to report if you have not started monitoring certain aspects, but definitely companies should aspire to report on all the leadership indicators so that it gives a very strong message to all your stakeholders on your ESG performance. And with respect to the alignment of BRSR with various other frameworks, of course, BRSR is a guidance which is generic to any type of industry. It is not industry specific, and it addresses or provides information to all the stakeholders, and the a short term, medium term, and long term time horizons are covered under the BRSR. This is a brief comparison how we stand with respect to other global frameworks. And while the other standards like Sas B or TCFD are more aligned towards providing information to the providers of capital, while CDP, GRA, BRSR is more inclined to providing information to all stakeholders. And so this is a very brief comparison. And with respect to the indicators, we saw the BRSR as having the performance based indicators, some essential and leadership indicators. And if you see that it is almost aligned, almost 91.3% with respect to GRI. GRI is able to cover most of the aspects, which are the elements under BRSR. This is just a comparison, how it is really overlapping with other frameworks, how the matrices are overlapping with other frameworks. And so this is very brief about the BRSR framework. And now ESG, why business should really focus on this and why it should capitalize. Uh, because ESG is something, if you have to reduce your business risk, this is something which every company has to start working on, and it is really going to generate you business value in long term, and it should be seen as an investment, and it has to be made viable if we have to sustain. And there is a lot amount of pressure coming from all directions. Now I have shown the regulatory landscape for you. The regulators are mandating that you have to come out with the ESG disclosures, and it is becoming a law in many countries, and in future in India it may also become a law. And with respect to financial institutions who are the providers of the capital, when they are going to give loans or any kind of financing or investment decision, or even in case of providing insurance to a company, they will assess your company on the ESG performance. So companies or corporates should be ready, prepared for it. So there is a demand from financial institutions. Now supply chain. Now if you are supplying to a big corporate, now corporate will demand your ESG disclosures or performance if they have to source material from you. So there is a supply chain pressure. If you are exporting to advanced or developed countries, they are going to assess your ESG performance. So there is a supply chain pressure. Now customers are going to use only climate friendly products or environment friendly products. So there will be a great amount of demand from customers. They'll see how eco-friendly is your product, how eco-friendly is your company. So the amount of pressure from customers is more. And community will put a great pressure on risk. Wherever you operate, whichever country you are there, communities are going to put a lot of pressure if you're not focusing on social or environmental aspects. Not but not last not employees. If you see, the employees nowadays are going to work only with climate friendly companies or ESG friendly companies. They are no more willing to work with companies which are profit focusing, only profit focusing. So there is a demand from almost all of the stakeholders. So that's making up the entire ecosystem, and we have to prepare ourselves to meet these requirements. So what is the need of the hour for organizations? What we all have to do is to come out with a clear cut roadmap or a pathway or a strategy. We have to understand where we are right now. Have we incorporated ESG into our business strategy? These are the questions we have to ask ourselves. Do we have a governance framework in place? Do we have a management framework, management system in place? Have we listed the ESG elements which is material to our business? Are there policies in place focusing on ESG aspects? Have we established the ESG indicators? How we are going to measure the ESG performance? And thereafter, do we have the future targets and plans for implementation to improve the ESG performance? So we need to have a robust ESG programs. So you are the best person to decide, to see where you are as a company on this ESG road, and then the final stage comes to the disclosure and sustaining these activities. So this is a broader roadmap. So using this road, you can plan your way forward. And similarly, within the ESG, climate has become a very major serious issue now. And then climate related regulations and laws are being mandated. So companies should have a very robust plan on how they are going to act on it. Uh, Companies will be asked to cut down their GHG emissions. There will be laws, there will be caps, there will be fines, penalties, there will be you may be asked to purchase offsets. So we should have a clear roadmap on climate as well. Like ESG, climate also requires a strategy, policies, governance management frameworks. We need to identify what are the risks and opportunities and the risks we are going to face out of climate change issue. The starting point in climate change is everyone should measure their carbon emissions. That we call it as a greenhouse gas inventory. So every company should start with estimating their carbon emissions. We have to get it verified, and then we have to establish a base year. We need to set targets for the future to reduce our emissions. We need to have a roadmap for achieving neutrality status, and we have to have a roadmap for achieving net zero as well in long term. And for achieving these, we need to have tools like carbon pricing. We should engage with our supply chain, because achieving net zero is not we are reducing emissions within our boundary of operations. We have to uh, reduce all our indirect emissions, which is coming from our suppliers. So supply chain engagement is very key in our climate roadmap. We need to implement all the actions which we have decided to reduce our emissions. We need to also showcase our performance, disclose our performance, adopting the standards and frameworks like CDP or GRI, and to fasten us ourselves in this track, we can be a part of initiatives like RE100 or science-based targets, or we can become part of climate pledge or carbon neutral now. So these are the we need to be part of these kind of initiatives, so that we are aligned with our goals, as well as we can fasten our journey. So this is a broad climate roadmap. So please see yourself where you are, and then plan your activities ahead. So the key thing for all of us today is to understand this need, act on this seriously, and then act now. So that's the requirement. So before I close, I would like to brief about what Enking is. Enking is predominantly a carbon credit consulting firm servicing globally for more than 13 plus years, and we have a client base of over 2,500. At present, I think 3,000, serving 40 plus countries. We have a huge team based out of India, and we have global presence in several of the countries. We are an accredited solution provider and a gold partner of CDP. So these are some of the very brief overview about Enking. We provide predominantly solutions in four domains. One is on carbon credits, of course. The second one is on climate change. Third on ESG, and fourth on certain resource efficiency domains. Basically, we aspire to future-proof the business requirements, their ambitions, and the investor priorities and regulatory mandates. And we wanted to steer the planet towards net zero. That's our brand statement. We provide a variety of climate services, starting from helping companies to account their GHG emissions, the scope 1, 2, 3 emissions. If they want to do a product carbon footprint, we can help them. We help companies to be a part of science-based target setting, to set their targets as per SBTi requirements, SBTi standard, or net zero standard. Similarly, we can support you to report to CDP and be a part of initiatives like RE100. We provide third-party, external, independent assurance statements for all of your environmental statements, including GHG statements. We help companies to decide on the carbon price, which is a very good tool and is recommended by TCFD. If you have to identify, evaluate, your quantify your financial impacts, carbon pricing acts as a very good tool. Similarly, we help in the development and supply of carbon offsets, and we are also developing several of the projects based on nature-based solutions. We, in a nutshell, we do end-to-end services in terms of climate change, climate action. On ESG front, we help companies start doing a materiality assessment. We can consult companies to come out with a sustainability strategy, design their sustainability elements, devise a framework for them, and then help them to build improvement programs, establish matrices, and then finally they can go for a disclosure. The roadmap which I shown you on the ESG, so all the services we can do, including providing an external assurance to your sustainability reports. We can help you with any of the framework available in the market now, like GRI or IR or Sas B, or multiple of these frameworks. Similarly, we are into also providing some specific services on environment sustainability, like we can help companies to come out with a green supply chain program or sustainable sourcing. For example, if you want to do green audits for your supply chain, we can help you. And also we provide consultancy for variety of green certifications or ratings, including net zero buildings and net zero water waste certifications, and other of others, any of your specific requirements. And we are mainly or predominantly into development and supply of carbon credits. So these are the various types of projects from which can generate carbon credits that can be either used as an offset or can be monetized. Uh, Carbon credits are issued to to one carbon credit are issued to for 1 ton of CO2 equivalent of greenhouse gases either avoided or removed. 1 ton of carbon being removed or avoided, it has an opportunity of getting one carbon credit. So projects like renewable energy or energy efficiency are going to avoid the emission of carbon, while projects like forestry or sustainable agricultural practice or blue carbon talks about marine ecosystems. These projects are helping to remove carbon from the atmosphere. So that's why the nature-based solution And so these projects can also generate carbon credits. We have projects based on communities, like improved cook stove projects. We provide improved cook stoves to rural communities. That's in turn is reducing the use of biomass, providing a better air quality to the woman who's cooking in the households in rural communities. So these projects also can generate carbon credits. We have several projects on waste management front which can generate carbon credits, like waste to energy projects, or biogas type of projects, biomethanation. So many projects can be under waste management also can achieve carbon credits. So we help our clients in the development and supply of carbon credits. We deal with the various of these standards. We are aware about CDM standard. We know about VCS, gold standard, GCC. These are some of the popular standards we deal with and help our clients to the issuance of the carbon credits. And our expertise is in starting from identifying the project, and then uh, selecting the methodology, doing baseline study, and then monitoring and documentation. So every stage of the project we can help you with. And we are also into offset project development. Like, these are the types of different projects. We also help companies to invest and then generate carbon credits, either from the community based projects or the absorption based projects like forestry, or sustainable agricultural practices. So we can help you to in the investments, so which can generate carbon offsets. And so that's a very brief about NKing. So it's one small step for man, one giant leap for mankind. So please take this issue very seriously and act now. So you can contact us for any of your queries. And so these are the various locations where we are present in India and globally. Thank you very much for giving this opportunity.
Thank you so much, sir. So we have a question. I would like you to answer it.
Yeah. Now we are open to questions.
Yes, sir. I've displayed the question on the screen. Can you see it?
Just a second. How can a MSME go through the journey of carbon credits in the most cost-effective way? Um, See, when you wanted to register a project for carbon credits, then the project should be of considerable size, because there are a lot of expenses involved for registering a project, like the fee for registration, the consultancy fee for monitoring and verification, issuance fee. So if the project is of small size, then the costs involved in registering the project is more. So the project is not feasible. So at least if you talk about a solar power plant of maybe 4 megawatt or 5 megawatt, then the project can become feasible. If it's a very small project, then we need to pool up the projects. Suppose there are multiple units having smaller number of projects. So these projects can be pooled up, and then the project becomes feasible. So that's how I think for MSMEs, if it can be clubbed at a cluster level, and then whether some innovative model should be thought of if smaller projects have to be made viable.
So thank you so much, sir. That was the only question we had, and
Yeah,
thanks a lot for the insightful presentation.
yeah.
You were really well prepared and extremely professional in the way you kept us all at the height of our attention for almost an hour, and it was a pleasure to have you. And thank you all the attendees for extending your time and support for the event. We promise you to come back with such exciting topics very soon. The floor is again open for networking. Thank you.
Thank you very much for participants.
Thank you.
Yeah.